All right, so let's unpack this whole China situation. You've been really deep in the research on their economy,
Oh, yeah.
especially all the stuff about what their central bank is doing. And let me tell you, things are getting
Yeah.
really interesting over there. It's like they're juggling chainsaws over there, trying to boost growth
Yeah.
without their whole financial system going completely haywire.
It's a delicate balance, for
Yeah,
sure. Yeah. A lot of moving pieces to think about.
for sure. And the People's Bank of China, the PBoC, they're not exactly sitting on their hands.
Right.
They're being very proactive.
Huh.
Think of it like this. They've got one hand pumping money into the stock market with this swap facility thing, another hand encouraging companies to buy back their own stock, almost like a financial pep talk. And then bam, they just did this massive interest rate cut, 0.25%.
Oh,
It's the biggest they've ever done.
yeah. That's a bold move for sure. Signals that they're really serious about stimulating the economy.
Okay, so they're pulling out all the stops, but here's the big question.
Mhm.
How are these moves impacting banks, especially the big state-owned ones?
Right.
They're like the backbone of the whole system, right?
Yeah.
So what's the story there?
Well, we have to understand this thing called net interest margin, or NM. Imagine a shop owner. They buy products at one price. They sell them at a higher price. That difference is their profit margin.
Okay.
Banks are kind of like shop owners. But instead of products, they deal in money. NM is their profit margin. It's the difference between the interest they earn on loans and what they pay out to depositors.
Okay, gotcha. So higher NIM equals happy bankers.
Exactly.
Yeah.
But Chinese banks, especially those big four state-owned ones, are already walking a tightrope with historically low NIMs.
Uh-oh, how low are we talking?
Well, take the Postal Savings Bank of China. One of the big players, they reported a 1.91% NM. The other giants, Industrial and Commercial Bank of China, Agricultural Bank of China, and China Construction Bank, they're all hovering around 1.4 to 1.5%.
Wow.
Those are some seriously slim margins.
Yeah, especially compared to past years.
Right, exactly.
Okay, those are some thin margins, but like, why should we care?
Well, imagine one of the savviest investors in the world. Someone nicknamed Superman for his business acumen. That's Cha-ching. And even he is getting out of the Postal Savings Bank, despite it having the highest NM among those state-owned banks. He's selling his shares. That should tell you something about how worried people are about these banks.
So even the bank that's doing relatively better is raising some red flags.
Uh-huh.
Yikes. But let's get specific here. How do these rate cuts we were talking about before directly affect the NIM?
Right.
It seems like a pretty direct hit.
Yeah, you're right. There's a direct link. For every 10 basis point drop in the one-year loan prime rate, basically the benchmark for loans banks' NIMs shrink by about 5 basis points. And for the 5-year loan prime rate, it's a 1 basis point squeeze.
All right, break this down for me a little bit. The PBoC just chopped both the 1-year and the 5-year loan prime rate by a whole 25 basis points each. What does that do to those already pretty skinny bank margins?
All right, let's do the math. The 25 basis point cut on the 1-year loan prime rate translates to a 12.5 basis point reduction in NI.
Okay.
Then add the 2.5 basis point hit from the 5-year cut, and we're looking at a total estimated shrinkage of 15 basis points.
Ouch. So those razor-thin margins are getting
Yeah,
even thinner.
precisely. We could see the Big Four's NIM pushed down to a precarious 1.3%. And remember, that's without even factoring in other pressures like existing mortgages with higher interest rates still on their books.
Wait, there's more. This is starting to feel like a financial pressure cooker over there.
It is. To add another layer to this whole situation, there's an official warning line for NIM set at 1.8%.
A warning line. Okay, that sounds serious.
It is. And based on that benchmark, all 4 of those major state-owned banks are already teetering on the edge.
So while the PBoC is trying to like rev up the economy, they're also putting a ton of strain on the banks, especially those giant state-owned ones.
Yeah.
It's a high wire act for sure.
It really is. It really is a delicate balancing act, trying to boost the economy, but at the same time, trying to make sure that the whole financial system doesn't
Right.
completely implode.
Exactly. It's like, you know those dominoes you used to set up as a kid?
Yeah.
You just tap one and then the whole chain would collapse. Well, China's economy is like that first domino. And what we're seeing now are like those first little wobbles.
Yeah.
You know? Think about what that might mean for the rest of the world.
Yeah, that's a really good point.
Yeah.
We can't just view this as like an isolated Chinese problem.
Yeah.
You know,
Right.
their economy is so intertwined with the entire global system
Right.
that any tremor there is going to send shockwaves everywhere else.
Okay, so let's play this out a little bit. What happens if these big banks we're talking about actually start to buckle under the pressure?
Right.
What kind of domino effect are we talking about here?
So imagine those big four banks. They're like the pillars of China's entire financial system. If those pillars weaken, their ability to lend money dries up. Businesses, big and small, struggle to get the loans that they need to operate to grow.
And when businesses can't grow,
The whole economy slows down,
that makes bad.
batching job losses, reduced consumer spending. It's like a whole downward spiral.
That sounds pretty grim.
It certainly has the potential to be. And remember, this isn't just contained within China's borders.
Right.
Think about all the countries that rely on them for trade, for manufacturing, for investment.
Right?
A slowdown in the Chinese economy could throw a real wrench into global supply chains,
Yeah.
impacting everything from, just the availability of goods to the prices that we pay for them.
So not just a Chinese problem, a world problem.
Exactly. We're living in an interconnected world, for better or for worse.
Right.
What happens in one major economy has ripple effects everywhere.
This is where it gets really interesting, right? We always hear about China's rise, reshaping the global order, but what if this economic fragility we're talking about kind of flips the script?
Yeah, it challenges the assumption that I think a lot of people have had about China's, seemingly unstoppable economic engine.
Right. So instead of just a narrative of pure dominance, maybe we're seeing a more complex picture, one that includes, vulnerabilities and potential instability.
Precisely. And that's why understanding these underlying dynamics is so crucial. It's not just about following the headlines. It's about digging deeper, seeing the interconnectedness of things, considering different perspectives.
This whole deep dive is honestly making me look at things a little differently.
That's the power of knowledge, isn't it? It helps us move beyond like a surface level understanding and really grapple with the true complexity of the world.
Okay, so let's assume for a minute that these pressures on the banks keep mounting.
Okay.
What are some possible scenarios that we could see playing out?
Well, one possibility is that the Chinese government steps in with even more aggressive measures to prop up those banks. Think like direct capital injections, maybe some other financial wizardry that they can cook up. They've already announced plans to issue bonds to recapitalize those state-owned banks, but they might need to pull out even bigger guns.
And that would be on top of everything else they're already doing. Talk about a high-stakes gamble.
It is. And these interventions come with their own risks. If they aren't handled carefully, they could trigger inflation, distort the market even more, and potentially inflate new bubbles.
It's like trying to plug one leak while another one springs open somewhere else.
That's a good analogy. It's a constant game of whack-a-mole, trying to anticipate and mitigate risks as they pop up.
Man, this is making my head spin. But in a good way,
Yeah.
It feels like we're peeling back the layers of an onion and each layer reveals something new and surprising.
That's a great way to think about it. And remember, this is an ongoing story. Things are constantly changing. New information is always emerging. What we're doing here is building a framework for understanding, a set of tools that will help you make sense of these unfolding events.
So it's not about predicting the future, but about being prepared to navigate it as it unfolds.
Exactly. It's
Yeah.
about informed engagement, critical thinking, the ability to connect the dots and see the bigger picture.
Well said. So we've covered the potential fallout within China itself. But what about those global shockwaves we were talking about before?
Right.
This is where it could get really interesting, right?
Absolutely. Let's explore that in more detail after a quick word from our sponsors.
Okay, so we've talked about all this pressure building in China's banks and how their struggles could ripple out through their own economy. But let's zoom out to the bigger picture here. What about those global shockwaves we were talking about?
Right.
How could this whole situation impact the rest of the world?
Well, think of it like this. China is the world's factory, right?
Yeah.
So much of what we buy, from electronics to clothing, comes from, or at least passes through China. If their economy slows down significantly, those supply chains could get choked.
So we're talking about like potential shortages, delays, maybe even price hikes?
Exactly. And it goes beyond just consumer goods. China's also a major player in the global commodities market. They're huge consumers of raw materials like oil, copper, iron ore. If their demand weakens, the prices of these commodities could plummet, impacting economies that rely on exporting those resources.
Okay, so we're seeing a potential domino effect, but like on a global scale. First, the Chinese banks struggle, then their economy slows, and then those ripples spread out, impacting supply chains and commodity prices around the world.
Precisely. And remember, all of this is happening against a backdrop of already heightened geopolitical tensions and global uncertainty.
It feels like we're talking about a perfect storm brewing.
Well, maybe not a perfect storm, but certainly a confluence of factors that could significantly impact the global economic landscape. It's like a giant game of Jenga, and someone just pulled a pretty important block. We're still waiting to see the tower holds.
This whole deep dive has been truly eye-opening. We started by focusing on China's central bank, trying to walk this tightrope between stimulating growth and maintaining financial stability. And now we're talking about potential global ripples that could reach every corner of the world.
It's a reminder that we're living in an interconnected world more so than ever before. What happens in one country, even one as seemingly powerful as China, can have profound implications for everyone else.
So as we wrap this up, what's the one key takeaway you want our listeners to walk away with?
The world is complex, interconnected, and constantly evolving. Don't just accept simple narratives. Dig deeper, question assumptions, and connect the dots. That's how you develop a true understanding of the forces that are shaping the world around you.
Couldn't have said it better myself. This has been a fantastic deep dive, full of insights and definitely a lot of food for thought. So as our listeners continue exploring these topics, what's one question they should keep in mind?
If those pressures on Chinese banks continue to mount, and their government is forced to take increasingly drastic measures, what might the unintended consequences be, both within China and for the global economy? Keep that question in mind as you continue your own exploration of this complex and fascinating story.
Well, that's all the time we have for today's deep dive, but this conversation doesn't end here. Keep exploring, keep questioning, and keep connecting those dots. We'll see you in the next deep dive.